Good morning. This is Dave Toth with an RJO MRT Technical Webcast update on the energy complex for Monday, March 7th. Starting off here with an intraday 4-hourly chart of the April crude oil contract. You can see the past couple of days continuation of the past week's continuation of the secular bull trend to the highest levels we've seen. Looking here at a weekly log scale chart, the highest levels this market has seen since September of '08. And looking again on this long-term scale, you can see virtually no levels of any technical merit between spot and the July '08 all-time high at 147.27. Not surprisingly, the extent of this secular bull trend has produced some of the highest bullish sentiment levels we've seen in years. On the bullish consensus perspective, at 64% is relatively mild compared to the 90% level seen back in that July of '08 period. So on this count, the market can rally quite a bit further to create that frothy behavior or frothy sentiment condition typical of major peaks and reversal environments. On the other hand, the MRT Bullish Sentiment Index of large spec bullish exposure reportable to the CFTC is currently at an 82% level, the highest this indicator has seen since March of '04, reflecting 430,000 long positions to just 94,000 shorts. Needless to say, this is the type of sentiment condition that, not surprisingly, could expose a larger degree correction or reversal lower, but it's important to remember that sentiment is not an applicable technical tool in the absence of a confirmed bearish divergence in momentum needed to stem the clear and present and simple uptrend pattern of higher highs and higher lows. And looking at this daily log scale chart, you can see weakness below the 95.62 corrective low from February 24th is minimally required to jeopardize the impulsive integrity of this broader bull trend. Moving back to the 4-hourly chart, that 95.62 low appears in more detail here. That's the corrective low from February 24th, and arguably would be, if the market were to fail, would fail initially below the par 15 or 100 spot 15 latest corrective low from last Wednesday. That would start to expose or suggest that this latest rally from that 95.62 low is a complete 5-wave Elliott wave pattern. We think that could be one of this market's most important technical levels, but clearly the dominant technical factor right now is simply the uptrend pattern of higher highs and higher lows, and minimally it's going to take a break below the 100 spot 15 corrective low from mid last week to confirm a bearish divergence in momentum to even defer this secular bull trend, let alone threaten it. In sum, a bullish policy remains advised with weakness below at least par 15 and preferably 95.62 required to defer or threaten this bullish policy. And in lieu of such weakness, further and possibly accelerated gains remain anticipated, and again with virtually no levels of any technical merit between the current 106 handle area and that 147 high from July '08. There's really no way to tell how high this current bull can go, and we don't advise underestimating its extent or its potential. Similarly, moving to the April RBOB contract, you can see the continuation of the secular bull trend with recent corrective lows at 298 the figure and 284.43 as the latest corrective lows this market is required to fail below to defer or threaten the secular bull trend. In lieu of such weakness, further and possibly accelerated gains remain advised. With moving here to a weekly log scale chart, you can see the current prices at 308, half a dollar below the 363 all-time high from July of '08, and we don't want to underestimate the extent to which the secular bull trend can continue. So again, a bullish policy remains advised with weakness below at least 298 and preferably 284.43 required to defer or threaten this bullish count. And lastly, and similarly, looking at the April heating oil contract, similar corrective lows at 301.14 and 285.83 remain those corrective lows and risk parameters this market is required to fail below to arrest this clear and present uptrend and expose a larger degree correction or reversal lower. Moving here to a daily chart, and as is similar with the other two markets we talked about, the current momentum indicators on a daily scale, be it the stochastics or in this case the RSI, are all at high levels that some may construe as overbought, and under such extreme but simple uptrending circumstances, we advise traders as always, to consider such overbought references as totally meaningless. That does not in any way indicate that this market might now be vulnerable to a reversal lower. The only objective way to know that this trend is ending is by proof of weakness below recent corrective lows. And again, in this case, those lie at 301.14 and 285.83. Please stay tuned to updates on these and other markets on our rjomrt.com website, and good luck with today's trading.